Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and success strategies. Hi, I'm Michael Bull. Thank you for being with us. Well, this segment is brought to you by CommercialAgentSuccess.com. It is training, video training online for commercial real estate agents and sales managers. Check it out at CommercialAgentSuccess.com. We have a great show for you today. We're going to talk about the industrial real estate market. You know, what does the future hold? Industrial has been doing very well, but we have some things going on in the economy. We have a cycle that's a little long in the tooth. We have tariffs going on and a lot of discussion there. So what should we expect, and how will interest rates impact industrial real estate moving forward? We'll talk about all that and more. Please welcome my first guest, Barbara Denham. Barbara is Senior Economist with REIS, and she's joining us on the phone. Barbara, thanks for being with us.
Thanks for having me.
And hey, Barbara, I really enjoyed speaking with you at the CPA conference. You did a great job with the fireside chat. Thanks for joining us for that.
Oh, that was fun. Thanks for having me.
And let's talk about industrial real estate. It seems like it's been the favored class for a while. How are occupancy rates and rental rates trending? Is it just great everywhere?
Well, unfortunately, the industrial sector is kind of taking a breather over the last 2 quarters. About a year ago, or even at the end of 2017, I was saying this is the MVP of commercial real estate. It had the highest occupancy growth rates, very strong rent growth. It was a broad growth. Every single metro across the U.S. was seeing pretty significant growth, and I think a lot of that was spurred by the optimism in the e-commerce world. However, in the last 2 quarters, we have seen a significant slowdown in occupancy. As first quarter, there was definitely much lower net absorption, but positive. This quarter, the net absorption was very low, and it's a little disconcerting because construction has been so strong. So everyone was so optimistic last year, and construction really started to accelerate, and that acceleration is led into this year, more construction, and yet net absorption was low in the first quarter and even lower, almost 7 million square feet, which is very low in the second quarter. And I think what's happened is with the tariff wars and the trade wars kind of creating a lot of uncertainty, a lot of potential lessors or tenants have just, said, let's not rent anything, let's not sign any leases until we know what's going on.
So that's interesting. So when I think of the industrial sector, I think of developers who are a lot more conservative, typically speaking, and tend to want to do build-to-suits. And of course, they've been doing some spec building over the last several years. So you think maybe they've gotten over their skis a little bit?
Oh, yeah. Yeah, that's a good expression for what's happening. More spec development over the last, say, 6 quarters than we have seen, and a lot of it is for lease. It's not owner-occupied. So yeah, they definitely have gotten over their skis, and because again, a lot of tenants are just, there's still probably demand. They're probably just sitting it out for a quarter or two until they understand what the tariffs mean. But until they understand what's happening with this trade war, they're just not leasing like they had been.
And the various industrial types of properties, Barbara, that you guys track at REIS, tell me how they're differentiating in performance and rental rates and occupancy. Is it these really big boxes that are having more of the challenge?
It's kind of across the board. I can't say that there's any really defining properties. I would say, like in any situation, the better, in industrial, it's more about location. So the properties that are closer to, the infrastructure and the highways and the airports are probably better suited than the ones that are more remote. Newer is usually better in terms of like logistics and ceiling height, things like that. But generally speaking, I think a lot more of it has to do with location, because it's not like an office building. You don't have to be in the shiny new building when you're in industrial. But the thing is too, usually in industrial, the new construction has been concentrated in the bigger markets like San Bernardino, Riverside, in the Inner Empire. Chicago, Atlanta, Houston, and Dallas are like the biggest markets, and they've still seen positive net absorption, but not nearly as much as they had in the past.
And what are some of the top markets, Barbara, that are maybe winning or maybe lagging right now?
Well, the 5 metros that had the strongest growth were Jacksonville, San Diego, Denver, Boston, and Columbus. The ones that saw problems in the second quarter were Philadelphia, Houston, Los Angeles, Miami, suburban Virginia, and Palm Beach.
Okay. And what about rental rates, Barbara? It seems like you look at industrial historically, and the rates have been a little stagnant. But of course, we've had some rent increases over the last several years. What are the trends right now?
Rent growth has slowed. It has definitely slowed. It was over 1% per quarter last year, and that's slowed definitely in the first 2 quarters, about 0.4, 0.6%. And like I said, it's more because a few markets are seeing rent declines, and then just the overall pace of rent growth in the last 2 quarters has slowed pretty significantly.
Now, what about investors, Barbara? We're talking with Barbara Denham with REIS about the industrial market. It seems like when we take an industrial property to market, we get multiple competing offers. Investors like industrial now. What's the volume?
Volume has been pretty slow. Again, a much more of a slowdown in industrial property sales. Definitely a slowdown across the board in all commercial property sales. I think lenders are a little bit more hesitant. Construction costs are going up. We're seeing a variety of cap rates on the properties that have traded. So, for example, like in Atlanta, they're all about in the 6 to 8% range, which isn't bad.
What about cap rates, Barbara? Cap rates, how are they trending right now in industrial?
They've kind of stayed the same. Like I said, they're in Atlanta, they've been in the low 6 to 8% range. Some markets they're as high as 10%. I can't really say which ones. It's a very much a question of selection bias. Mm-hmm. I don't like talking about cap rates because you have 1 or 2 trades that had very high rents and had very low cap rates, mm-hmm. And then the next quarter you'll see more properties at the bottom with higher cap rates. So it's hard to really get a trend when there's the transaction data is as sparse as it is. But generally speaking, the overall cap rates in commercial real estate are not increasing as you would expect, given that interest rates are starting to increase.
So what do you expect moving forward for cap rates for industrial sector?
Well, I think they might trend up a little bit. Again, not just because all of a sudden we've created a little uncertainty with this trade war, but the theory is that with interest rates rising, cap rates generally rise too as the cost of capital goes up, but we're just not seeing that as we have in previous cycles. So there's a bit of a squeeze between, say, the cap rates and the 10-year Treasury notes. I think right now in industrial, people are sitting it out until they understand what's happening with this trade war issue.
Interesting. Well, where do you think there might be some opportunities? Are there certain sectors in industrial real estate that might be opportunistic, or maybe certain market areas that have more demand?
Yeah, generally speaking, you have to do your homework. I'm seeing a lot of growth in the warehouse and storage industry in terms of job growth. But it's scattered across the U.S. Certainly Amazon is still having a pretty significant impact on the warehouse industry. A lot of their properties are owner-occupied. I generally think the e-commerce businesses are still going to be growing, not quite at the same high rate as they had been, but I think there's still going to be growth going forward.
Okay. Well, Barbara, what would you leave our audience with related to industrial real estate?
I would say do your homework. There's probably still opportunities out there. You just have to know your market pretty well, and you have to look at the construction statistics because there's still a lot of, you can see a great opportunity for construction and not realize that there's already a permit and plans for construction in that site. So I would definitely do your homework in terms of, the due diligence and the understanding what the construction data is saying.
Yeah, well, that's a very good tip, and I would leave a tip that if you own an existing property that's leased, might be a good time to consider selling. In my viewpoint, maybe that's just because I'm a broker, right? But and I do sell properties. But if you look at rising interest rates, kind of where we are in the cycle of real estate, it's not a bad time to sell, is it?
I would agree. I would agree. It's definitely a good time to sell.
All right. Well, Barbara, thanks for joining us. Great information as usual.
Oh, no problem.
All right, well, stay with us. We'll have more on industrial real estate right after this short break. I'm Michael Bull. This is America's Commercial Real Estate Show.